Good morning, ladies and gentlemen, and welcome to another edition of Graphic Business Explicit Discussion. Our topic for this morning will be uh, the IMF review of the Ghanaian economy. Yes, I can see our prof is here. Our guest speaker is here, prof. I can see Derek. Welcome. Park of you, welcome. Editor Graphic Theophilus Yate, welcome. Assistant Editor Graphic Business, welcome. Eddie Jr., Raymond, I can see you all, welcome. And welcome to our special guest, Prof, once again. So this morning, as I stated earlier, Graphic Business first held this first Twitter Spaces discussions in August, at the time when the country had just read its mid-year budget. And we were fortunate to have Professor Bokpin join us together with my cobbler of CNG to review the finance minister's mid-year budget. This time, however, our discussion will center on the IMF delegation who just came to town last week and reviewed the economy. In quotes, they passed a vote of confidence in the economy at the joint press conference in Accra on Friday. That is, according to their statement, we are on track to meeting the targets set in the agreement with the IMF. The review of the economy also comes on the back of the MPC report, that's the monetary policy report by the Bank of Ghana, which also affirms the economic growth of the economy in the second and third quarters. With us today to dissect the issues is our favorite guest, an economic lecturer, Professor Alufa Godfred Bokpin. Prof, welcome again, once again to this dialogue. And this is me, your host, Buahina Samoa, welcoming all of you. Prof, so let's start off. Let's kick off the discussion. We know the participants will join later. As is typical of Ghanaians, we are always late. They say it's Ghana made time GMT. So, but we have to start. So, Prof, 3 months ago, you were on point to say that government in its own midterm budget had revised its own macroeconomic targets downwards, which for you indicated that government itself was less optimistic about the economy. What does this new review with IMF tells us, Prof?
All right, thank you very much. And good morning to our cherished listeners. It's always a privilege to be given this platform, and more importantly, for the subject matter that we are discussing, because yes, whether we like it or not, in the next 3 years, our lives, economic issues, financial, whatever, will be impacted largely by the IMF supported program. And therefore, it has some kind of a higher stake. And therefore, the market has been expectant in terms of what will be Ghana's performance under the first major review. Now, let me start off this way. If you look at the press statement of the IMF, largely just confirms the position that we had maintained, that yes, we've seen signs of recovery, we've seen signs of relative stability, but we are not out of the woods. We have not totally turned the corner. And largely, you can also infer that from the IMF press statement. If we want to understand how the IMF program would impact Ghanaians, then one could reasonably say that it's too early to actually assess the overall impact of the program, because largely the program was just approved on May 17th, 2023, and it's just a couple of months down the line. But the understanding is that there were certain prior actions that we had to start to work on actually from the beginning of the year. And there were about 5 of them in terms of prior actions. One had to do with government being able to pass all the legislative instruments to ensure that the revenue enhancement measures in the 2023 budget.
Sorry.
Hello, can you hear
Yes,
me?
Prof, you are back on now. So, Prof, may I suggest that you cut all calls? All calls coming through will
Okay,
disrupt you. So, kindly
all right,
mute
thank you so
and
much.
cut them off when they come immediately. Please
Okay,
go
thank
ahead.
you.
Yes.
So it was clear to us February last year, thereabout, when water, electricity prices were adjusted. We said that these were all prior actions. Even before the program was approved, there were certain actions that we needed to undertake, also including ensuring that GET Fund, Road Fund, District Assemblies Common Fund actually start reporting their provisional spending and the rest of them on the give mix, and then also sign a memorandum of understanding between the Ministry of Finance and Bank of Ghana to eliminate fiscal dominance of monetary policy. Essentially, we are talking about zero financing of the deficit, and then also publishing the Auditor General's report on the COVID-19 expenditure. So these were prior actions. Of course, we can also add taking steps to comprehensively restructure our debt. But then when the program was approved, for the purposes of this major review, we have 3 basic targets, structural benchmarks that the country needed to fulfill in order to scale this wall. And if you look at them, they are not too hard to comply with. One was to finalize the comprehensive stock take of payables accumulated by all ministries, departments, agencies, and then design a payable clearance plan and lay out a structural reform plan to reduce future accumulation of arrears. And the deadline for the country to achieve this was June 2023. The other structural benchmark was to finalize a strategy to strengthen the financial sector and rebuild financial institutions buffers. And here, Bank of Ghana had a leading role to play in that. Again, that is not too difficult putting a plan together. And in fact, if you look, this country, we don't have a problem coming out with a strategy. We don't have a problem coming out with a wonderful plan. The challenge has been implementation. The challenge has been walking the talk and then also being consistent with the target that we set for ourselves. So one could say that if you look at these structural benchmarks, the third one being publishing the updated energy sector recovery plan. Okay, again, the deadline was June. So with these 3 structural benchmarks, certainly one could say that these are low-hanging fruits in terms of conditionalities that we had to meet. And therefore, the expectation had been that the country will be able to comply with those requirements, and therefore we will get a pass and we'll be able to assess the next tranche of the IMF supported program, which is $600 million. But then we can look at all of this within context then. The IMF press statement was clear that we have seen progress. And I want to look at this progress across a certain macroeconomic themes. One is exchange rates. With the exception of January, where the cedi depreciated sharply, especially from the time that the IMF supported program was approved, May 17th, to the end of September, we can say that we have seen some level of stability with the performance of the local currency against the major trading currencies. And that is not surprising, we could also put this within context. Generally, IMF supported programs are generally FX positive in the case of Ghana, and of course other African countries as well. In other words, we tend to get stability in the foreign exchange market once an IMF program is in place. And that is what we are also beginning to see here. But we can look at the nuances also. What are they? Because essentially in December, the government took advantage of the debt service suspension clause under the G20 common framework. The fact that we were not paying coupons on our external debt. At that time, we had an obligation of more than $1 billion to settle. By taking advantage of the G20 common framework, we suspended coupon payment on our external debt. Now, cumulatively, to date, the governor of Bank of Ghana has told us that we have been able to save approximately $2 billion as a result of the country taking advantage of the debt service suspension clause under the G20 common framework until the entire debt restructuring has been completed. So that has also helped in the stability of the cedi. That has helped in shoring up our international reserves, because you could just imagine if the country had to make those coupon payments of about $2 billion as at now, our reserves would have gone so low, and that would have heightened on economic uncertainty, and probably the effect of that would be accumulated pressure on the local currency. Now look at it also this way. Because the IMF program has this austerity impositions, you also see that there is a general slowdown in economic activity. There's a general slowdown in economic activity. We can see this from the ports. Traffic at the ports have slowed. What that also tells you is that the demand for FX, foreign exchange, to meet our import bills have gone down, and therefore that should free up some space on in terms of the pressure that would have come on the local currency. On one hand, we can say that yes, this is stability in the foreign exchange market, but remember, our economy is largely import dependent. So once import has slowed down, it's going to have effects on the economy as a whole. So what that tells you is that the stability we are seeing in the short term now could be coming at a higher cost in the medium to the long term. Why is that so? You also see part of the stability coming from the fact that there's a general slowdown when it comes to budget execution. Ongoing projects more or less have stalled. Many of them would have relied on imported items, movement here and there. So overall, we can say that yes, we have seen some stability in the foreign exchange market, but it's not a true reflection of general economic activity, right? And therefore, we need to be a bit conscious how we celebrate this. Otherwise, we will be celebrating prematurely. But of course, to the extent that the stability has come, and we cherish that, but we need to build on that going forward. The other,
okay, Prof. So in
yes,
other words, you're saying that the stability we are seeing is artificial.
well, to some extent, yes. We can see that we have stability, but the whole economic activity is not in full gear.
Okay.
When everything is in full gear, government is on track servicing its debt. Government projects are all on track, being executed efficiently, timely, and the rest of them. Then you can see the efficacy of the policy you are putting in place. Okay. As we speak, we are not done with restructuring of our external debt. Remember, if you look at the IMF press statement, not once they have talked about the fact that significant progress needs to be made from the restructuring of our external debt. That is very, very important. Why is that so? If you look at the IMF supported program, the financing gap is estimated to be around $15 billion. $15 billion. Out of that $15 billion, the IMF is only able to provide $3 billion the next 3 years. The World Bank is also giving out something. So if you put all that we are getting together from the multilaterals, essentially the IMF, the World Bank, plus African Development Bank will also come in, and the rest of them, we have a gap of approximately $11 billion in financing needs, critical for balance of payment support also. That translates to an annual external debt relief of about $3.5 billion. This is what we expect annually from our external creditors, both external bilateral, being handled by the official creditor committees, co-chaired by China and France, and then external commercial. In terms of Eurobonds, there are two levels of committees there, the one at the international level and then the regional level. So this is the level of relief we expect. So what that tells you is that the progress we expect from the IMF program, especially with stability in the foreign exchange, boosting our international reserves, has more to do with the progress we are able to make from the restructuring of our external debt. Now, given that we have suspended coupon payments, remember, it hasn't been cancelled. Okay?
Yeah.
And it may not be the case that we will not pay this coupon some time to come. This is one of the things that could happen. At the end of the debt restructuring, given this coupon suspension.
Okay, Prof. I think Prof line has tripped a little bit. Hold on. So if you have just joined us, Prof, you're back.
Hello, can you
Go
hear
ahead.
me now?
Yes, you're back now. Yes, go ahead, Prof.
Yes. So at the end of the day, this is how we look at the conclusion of the external debt restructuring. Whether the country will end up with a position of net present value neutral with our external debt restructuring or NPV negative. If we arrive at NPV neutral, then it means that we merely postpone our coupon payment and that we have to pay all of them later, and then probably some level of maybe reprofiling. We can, meaning that investors didn't lose anything when you end up with NPV neutral. The other favorable position that the country can have, which we are hoping for, is what we call NPV negative. In that case, it means that the country would have achieved some level of reduction in present value terms, which will mean haircuts on the on those external creditors. So that is where we are. One possible outcome from this debt restructuring may be preferably reprofiling. We've seen a similar case with Zambia, so that perhaps the understanding could be that, unlike the case of HEPIC and then the Multilateral Debt Relief Initiative, which we finished in 2006, we completed HEPIC in 2004. We had express debt forgiveness. One will say that in addition to forgiveness of sins, we receive forgiveness of debt. It may not mirror a similar position in this particular case. Remember, every country is going through their own version of challenges from COVID, Russia, Ukraine. Now we're also seeing some kind of turbulence in the Middle East with the ongoing conflict between Israel and Hamas. The possibility that it could escalate to the region. Already we are seeing the effect of that in the world oil price and all of that. These are all sources of instability, right? So one should not expect that we can just have absolute debt cancellation like we had in the case of APEC and the Multilateral Debt Relief Initiative. Possibly, we could be giving some moratorium. Maybe this year we are not in a position to pay. Next year we may not be in a position to pay. It could be staggered. And then also the principal could be maybe reprofiled. That gives us some briefing space, which means that probably we will resume coupon and principal repayment maybe after 2024, 2025, or whatever. We can also see something similar with the restructuring of the domestic debt. It was not absolute debt cancellation.
Okay, ladies and gentlemen, if you have just joined us, we're having a discussion with.
Hello,
Okay, Prof.
can you hear me?
Go ahead, Prof.
Yeah. If you look at the domestic debt exchange that we have done,
Yes.
we made gains from two levels. One, some reduction in the weighted average coupon rate, which before was around 19.3%, but now with the restructuring, we have been able to trickle down our weighted average interest cost to about 9.1%. Okay, so the difference between the 19.3% and then 9.1% will be immediate gains to the government in terms of fiscal savings. Now, and then when it comes to the principal repayment, we have been able to extend the tenure from an average of 3.8 years to about 8.3 years. So we have extended the tenure. That offers us some kind of temporary relief, but we will resume payment 2027, 2028. So what the lesson we can learn from this also is that we then have to be very careful how we deploy the fiscal savings we make from this restructuring, such that 2026, 2027, 2028, all the way up to the last installment in 2038, the country is in a position to generate the sufficient cash flow to meet those financial obligations as and when they fall due, without compromising appropriate investment in the area of education, health, and social spending, and other critical sectors of the economy. That is how we should look at it. Now, we should also bear in mind that when it comes to the G20 common framework, between external bilateral and the total indebtedness there up for restructuring is around $5.4 billion.
Okay.
Then you also have the external commercial, the universe of eligible Euro bonds available for restructuring is around $14.6 billion. And here we are using cut-off date of 2022. Now, so that the idea is that what the progress that the official creditor committee will make also provides an input into the discussion with the external commercial, because of the principle of comparable debt treatment among different creditor types within the external debt. So that is very, very important. These are all this. If you look at the way the G20 common framework is structured, if you want to take advantage of that, then it's almost certain that you have to sign up for an IMF supported program, because the external debt restructuring is based on the debt sustainability framework analysis jointly done by the IMF and the World Bank. That is the guiding framework. So from the debt sustainability analysis, they've been able to estimate the financing gap which must be closed from the debt restructure. And that is why when the IMF estimated the program financing gap to be $15 billion, and they could only provide $3 billion, and then the World Bank and the others will also give theirs, the gap of approximately $11 billion has to be closed before the program could be approved. And that is why the staff level agreement was reached on December 12, 2022. Eventually, the program was approved on May 17, 2023, because there was one prior action that held the staff level agreement from going to the board, and that had to do with the official financing assurance, because without assurance of closing the gap, it makes no sense for the IMF to approve the program. Under such circumstances, the program can only achieve limited effectiveness. So that is how important the financing or the restructuring of the external debt is. In as much as it will be a big relief for us, that is also a major source of risk in translating the program into actual. So we can move on to the other layers.
Okay.
Now, when it comes to economic growth,
yes,
we have seen that growth is likely to be higher than what the IMF has projected. of 1.5%. So I've also seen in the papers the possibility that the fund will revise the projection for the year.
Absolutely.
But so yeah, but look at it this way. If you examine the first quarter GDP growth and you examine the second quarter GDP growth and you look at the drivers of that growth, it is not something that as a country we can celebrate.
All right.
Why are we saying so? We have had enough of this GDP growth that largely has been insufficient.
Okay.
Even the first quarter growth that we have seen and the second quarter growth that we have seen that beat expectations is still insufficient. And again, that growth is not job rich. What we have been saying, and if we have been saying this right from 2017, when the new government took over, we saw growth jammed, fueled largely by hydrocarbon production and mining sector. And we said that yes, this is good news, but this is not growth that largely we can celebrate. Why is that so? You can have positive growth, but if the drivers of that growth is not coming from the labor intensive subsectors of the economy, then that growth is not inclusive. That growth is not sustainable. That growth cannot benefit the ordinary Ghanaian. And that is the kind of growth we have recorded in the first two quarters of this year. And that is why we are a bit concerned that we are not only looking for growth, we are looking for job-rich growth. Growth that comes along with job creation. Where would that come from? That growth can only come from the industries, manufacturing. Meanwhile, in the first two quarters of this year, if you look at the source of the growth, manufacturing has been negative. Okay? And that is not good enough. And why won't that be so? Because of the level of adjustments in the economy. Even though we are seeing some progress, remember, inflation is still 40.1%. So the IMF can sit in Washington and say all is good for Ghana because food inflation is lower over there. But we are here. Food inflation in the northeast of Ghana is approximately 86%. So we are feeling it. Okay?
Yes.
So food inflation in the eastern region is more than 70%. In fact, it's more expensive living in some places in Ghana today than being in the capital. Okay, so we've seen some progress, but that is way inadequate. But again, we can also say that it's too early to say that we have arrived, that we have totally turned the corner. We've seen signs. We need to build on that. But more importantly, we must make sure that growth benefits Ghanaians. What kind of growth to benefit Ghanaians? Job-rich growth. So we are not only looking at quantity, as we have celebrated in the time past, we are looking at quality. Growth that comes along with job creation. Growth that helps Ghana to bridge the missing middle, where industry is not doing well. And that is where job creation could come from. So, and then again, if you look at Bank of Ghana's own data, right?
Yeah. Okay.
If you look at Bank of Ghana's own data, the high frequency data on real economic activity, which is measured by the composite index of economic activity, is still contracting. The only good news from there is that it's now contracting. Real economic activity is contracting at a slower pace than before. Not that we have turned the corner from that perspective. Okay. So,
Yeah.
and then again, broadly, if you see service, that is driving the growth. Again, it's not job-rich subsector. Again, if you look at agriculture, that is driving the growth. Again, it's not job-rich. So the point that we are making is that under this program, the growth envisaged under the IMF supported program will not be sufficient, will not be quality growth. And I think as a country, we cannot be so fixed on just GDP growth that doesn't trickle down to the ordinary Ghanaian. What Ghanaians want and what we are hoping for is that we want growth that will be job rich, because the level of unemployment is increasing in Ghana and that is not sustainable. It's a national security threat. and we should all be concerned. You also
So,
need to look at this. We also need to look at this within the next 15 years, the
yeah.
next 20 years, how Ghana is preparing to meet the generational expectation of Ghanaians in the next couple of decades. The forecast exists that our population will reach 45 million by 2040. 58% of that population will be less than 30 years. Probably they would have gone through free senior high school. They will be entering the labor market. So we must begin to engineer a certain kind of economy that will be ready to receive those graduates. As we speak, more than 1.6 million Ghanaians are successfully unemployed, regardless of the courses they did in the universities or in the tertiary institutions. That is pain. And once people finish universities, 2 years, 3 years, 4 years, 10 years, they are not getting sustainable employment. It's also losing graduates
So,
right from kindergarten, and the state will be expecting that they will get return on that investment. And here is the case: the people are unemployed. So that is it. So we've seen some stability, some progress, GDP growth, but remember, we are going beyond that. Let me give you an example. In 2018,
go on.
Ghana was one of the few countries in the whole world that had significant GDP growth.
Okay, so if you are listening to what,
Hello,
if
sorry,
you
can
just
you hear
join
me?
us, yes, go ahead.
Yes.
Go ahead, Prof. Go ahead.
Averagely from 2017, we had GDP growth around 7%, 7.5%. Good news. Ghana was a poster boy of the IMF. Remember, because between April 2015 and April 2019, when we had this growth, positive growth, Ghana being one of the countries doing so well, we were under an IMF program. It was all over the IMF website of how well they are transforming our economy. Then what happened? Given that that growth was not sufficient, was not inclusive, it wasn't surprising that when COVID came and Russia, Ukraine, the immune system of our economy was weaker, and therefore we were swept away. So that should guide us in terms of the kind of growth we want to have now. It cannot be the traditional GDP growth, will say growth, that doesn't trickle down to the ordinary Ghanaian. So that is the
So,
caveat that we want to have. And it's not only Ghana. In fact, within the IMF itself and the development community at the global level, the countries are looking at ways of moving away from the excessive fixation on GDP to other indicators of economic growth and performance that is people-centered. People-centered
all
growth.
right.
That is the discussion we are having now. In some countries, they
Yeah.
treasure gross happiness index much more than GDP. They treasure social progression index. They treasure growth that narrows inequality, growth that reduces poverty, rather than merely believing that achieving GDP growth will trickle down to reducing poverty and narrowing inequality. I think that is the kind of
So,
discussion we should be having
so,
at the end of the day in Ghana.
Prof, you did mention the fact that the growth pools are coming from the agricultural sector and, of course, the service sector. The finance minister actually gave a hint of the service sector growing by 6.3% and the agriculture 6.2%. And you did mention that earlier forecast was also coming from the carbohydrate,
Yeah, hydrocarbon production. Yeah, oil and gas.
yes,
And then
hydrocarbon industries.
you
Yes.
can add
And my
mining to
question
it.
is, absolutely, my question then is, if you say growth from agriculture is not enough, this is more like an agrarian economy. And that people have always said that, look, let's move into processing using
Yes.
agricultural products.
Yes.
So the question is, if we are having this high growth of 6.2% in agriculture, how come that is not enough? Can't it be that we should improve upon it so that we can take advantage of the value change in the agriculture sector?
Precisely, that is the point.
Okay.
That is the point that, again, if you look at the agriculture sector, you want to look at the sub classification. Okay, you lift the veil and then they go deeper and see where that 6% is coming from within agriculture. Maybe largely livestock, okay? Maybe
Yeah.
largely livestock and the others. So again, then we want to find out whether that growth is creating decent jobs. The answer will be no. Then
Okay.
again, when you come to even industry service, you can see that electricity consumption is driving the growth. It may also reflect utility adjustments. Okay. And so we want to look at the entire value chain. Agriculture is not cannot offer the kind of decent jobs in closing the unemployment gap. We need to link that to agribusiness and agro processing. Okay, so we are looking at the entire value chain. Now, to do so, there are certain things that will guide you. Now, look at manufacturing, where value addition can come from. You will see quarter 1, quarter 2, manufacturing is still negative. Over the years, actually, still negative. It means that we're actually not adding value. Any country, any country that is not adding value to its raw materials is not getting margins. The world thrives on margins. So we must be intentional about adding value. How do you do that? It's not merely slogans. Ask yourself, what we are saying the economy has turned the corner. Interest rate is in excess of 25%, more than 30% for industries that have to borrow. The question is that interest rate supportive of manufacturing? The answer is no. What kind of manufacturing and value addition can you do in Ghana if you have to borrow at 30%? It's impossible. Bank of Ghana's own policy rate is 30%. That is just too high, right? So if we are saying that Ghana has turned the corner, we have made progress. Yes, we've seen signs. These are early days. Let's build upon that. But then the question is how we build upon this. We must be intentional to drive down interest rate to below 10%.
Okay.
We must be
So, Prof.
intentional. Yes.
So I want. Sorry for interjecting you. Here we are kind of caught between the devil and the deep blue sea. We need to raise taxes, but we also need to what? Inspire growth in the economy. How is that going to be a balancing act? You talk about industry. Currently the taxes on industry and utility tariffs have all gone up, and you also mentioned about interest rate. How do we do the fine balancing so that we pick up from where we are going?
That is a very.
Sorry, Prof. I think your line tripped a little bit. Prof, can you hear
Because,
us?
yes, I'm here.
Prof, can you go back? I think your line tripped a little bit. Yes.
Okay. I said that it's one of the downside risks to the IMF protected program. On the average, when the IMF steps in, because of instability, the preoccupation of the IMF is macroeconomic stability.
Yes.
And oftentimes, the IMF is not interested in counting the cost of restoring macroeconomic stability, because restoring macroeconomic stability comes at a cost. The cost, if the cost is not appropriately managed and the transmission mechanism is not optimal, then it will disproportionately affect the critical sectors of the economy. So it means that if you look at the higher utility adjustments, higher taxes, and all of that, these represent the price that we have to pay in order to have macroeconomic stability under the IMF supported program. The question is that the optimal way to restore macroeconomic stability? The answer is no. And that is why from the date the IMF program was approved, analysts, think tanks across this country, even outside, including international NGOs, including Oxfam and the others, will certainly have problems about the program design. Why is that so? Because whilst government was talking about burden sharing in order to restore macroeconomic stability, the program is full of burden transfer, or the burden has disproportionately been transferred to private sector and households through higher utility adjustment, higher taxes. What that means is that there is a price we are paying in the immediate in order to have macroeconomic stability, which will come back to bite us in the next 3, 4, 5 years. And that is why anytime we have gone to the IMF to achieve macroeconomic stability, a year or two after that, when we try to unwind many of those harsh conditions, then the economy begins to falter as well.
So,
So,
Prof,
so
what would be the solution to this? How then do we strive in order to achieve? How do we balance this stability as against growth? And you have mentioned previously that anywhere that the IMF has gone, no economy has developed. So, how
yeah,
then do
transform.
we pick
Yeah,
up these pieces and run with it, please?
I agree with you perfectly. So
Mm-hmm.
we have said that
Mm-hmm.
there is the need for Ghana through a national consensus
Okay.
to see what other measures, reforms, structural benchmarks we can impose on ourselves to complement whatever reforms and adjustments in the IMF supported program, so that we're able to situate the gains that we'll make under the IMF program and make it more durable and sustainable.
Okay.
To do so,
Yeah.
if you look at the fiscal side,
Okay.
our problem is largely fiscal. It
Okay.
means the solution must also be fiscal. Of course, that is
Okay.
why we call it fiscal consolidation.
Mm-hmm.
Even though the IMF program is largely fiscal consolidation, the fiscal adjustment is contributing just 5% of GDP.
Mm.
Then again, if you look at the mix of the fiscal adjustment, is heavily revenue based instead of it being cutting wasteful expenditure.
Okay.
So oftentimes you realize that because it's government that negotiates on our behalf, government first tries to protect its interest and load the burdens on private sector and households. And that is why government assurance to the IMF in closing the fiscal gap was to tell the IMF that they will be able to impose this level of taxes on their citizens.
Mm.
The higher taxes you see in the program there are not coming from the IMF. These are things that Ghana government said they will be able to do under the program. And then the IMF will then say that, okay, this is the way you have chosen to close the gap. That is fine. But oftentimes, one would have also expected that the level of inequality and poverty in the country would actually guide the IMF in how they negotiate with the government. But at the end of the day, the IMF is also unable to push so hard from that perspective. So it's about a delicate balance
Mm.
between macroeconomic stability and then growth. How do you manage that balance?
Okay, Prof.
In any serious society,
Yeah.
in any serious society, the pressure would have been on government to cut down costs from their side. This
Mm.
is how businesses are given opportunity to grow. So firms, when they are going through challenges, they downsize.
Yeah.
Something they downsize significantly.
Yeah.
Just and then they adopt lean government. In Ghana, you can see under this IMF supported program, government is keeping its cost structure intact.
Mm-hmm.
Once you do that, in order to reach the fiscal savings under the program, then it means that you have to impose heavy taxes on your citizens and the rest of them. Then the other
Prof,
bit
hold on,
also is the
hold on to
structure.
that. Hold on to that. Let me ask a question on that area. Now, government is saying this that 70% and to 80% of all revenues are statutory payments. And that, in fact, when you say cut down costs, really, what is there to cut? That's the question. That's it.
Well, yes, you see, it's
Mm-hmm.
because government feels that they are the only one who have got, let's say, valid excuse.
Yeah.
If you look at private sector today,
Yeah.
you talk to private sector and households, do they have
Mm-hmm.
any space?
No.
Did we ask them whether they have space to absorb those taxes we are imposing? No.
No.
In this country today, whether you make profit or loss, you are paying taxes. Can you imagine? We
Mm-hmm.
have tax handles that are actually loaded on revenue even before you account for your expenses. Do you know something? If we continue like this, we'll will undermine our private sector, which is
Okay.
actually the job creation capacity of our economy.
Mm.
Okay, let me give you a couple of examples.
Yes.
I don't think that we are at the stage where we can reasonably say that Ghana should not govern with more than 40 ministers. We are at that stage. The number of ministries Ghana has is probably more than UK. That's not sustainable. That is not growth enhancing spending.
Yeah.
Check across state-owned enterprises. You see the staff strength in the last 8 years, 12 years has more than doubled in many of those state-owned enterprises. GMPC, TOR, Ghana Gas, Energy Commission, Petroleum Commission, all over. We are creating deputy CEO levels. I'm sure you are aware.
Yes. Okay. So if you are listening to us, we are having a discussion. Go ahead. Prof, your line trip a little
This
bit.
is,
If you can repeat that. Your line just tripled.
yes, I'm saying that this is a country that needs to strike a balance between operational cost, governance operational cost, and then growth enhancing spending space.
Mm.
And we are busy adding on onto governance costs on daily basis. On daily basis. If you continue like that, then there's no way you have space to actually cut the private sector. Look, let's not take it for granted. We have gotten to the point where tax revenue is not enough to sustain the operational cost of our democracy. And that's why now government is after your savings and your investment. It's not enough.
Yeah.
So if we have this huge inefficient government size overall, I'm not looking at just central government, general government. Now look at it this way. Let's go back to the IMF supported program and then we'll understand why this is important. One of the structural benchmarks that the government needed to achieve for the first review was to comprehensively, okay, was to
Yeah.
comprehensively, just a second,
Sure.
finalize the comprehensive stock take of all payables. Keep that in
Yeah.
mind.
Yeah.
Finalize the comprehensive stock take of all payables accumulated by all ministries, departments, agencies. So what we have seen in Ghana is that you have the debt accumulation from central government.
Yeah.
Meanwhile, ministries, department agencies, and other state-owned enterprises are equally accumulating arrears. And oftentimes, government will hide those arrears and not account for them using a general general government approach to accounting for our debt. Why
Okay.
is that so? Why is that so? And then let's see the effect of this. You know, we have been telling ourselves that we are not generating enough tax revenue. That is why the country is not developing.
Yes.
That is not true. In the
No.
last 15 years, if you look at the tax to GDP ratio of Malaysia, it hasn't been abnormally higher than that of Ghana. You can check.
Okay.
If you look at the tax to GDP ratio of Singapore, it hasn't been abnormally higher than that of Ghana. In fact, it has been below 15% for these two countries. Look at the development outcome in those countries. Okay, so what Ghana needs to adopt right now is a least cost approach to governance. If we can
Prof,
gradually
Prof,
gravitate,
Prof, hold
yes,
it there. Hold it there. Let me ask you a follow-up question on that area. Now, if these two countries you mentioned have a tax to GDP ratio of less than 15%, the assumption would be that they have been borrowing from the international market, right, to support their
yes,
developments. Wouldn't that be the case?
you can't rule that out. And Ghana
Okay.
has equally been borrowing.
Yeah.
And it's not a sin to borrow.
Sure.
It's not.
Absolutely.
Even though our tax to GDP ratio has been around 13%, that is not the total expenditure of government.
Okay.
Government spends in excess of that. The difference is borrowed. The question is, what is the spending efficiency?
Okay, I get you.
That is more important. Okay, look, in the last 30 years, if you look at that, in fact, since Ghana achieved debt relief under HIPIC, and HIPIC, we finished that in 2004. And then the multilateral debt relief initiative, we finished that in 2006. Since then, Ghana has accumulated a lot of debt. The question is, what have we used those debt for? Where is the evidence? Where is the value for money in all of them? Okay, so if we continue to manage our affairs like this, I will not prescribe a solution that says more money is the way to go.
All right.
A greater discipline and a little bit more money is what Ghana needs.
So
like
if I hear you right, if I hear you, even though we are raising money compared to our peers, we have not been efficient in managing the resources that we have.
Yes, and we should focus a bit more on that now. We should let this sink.
Could it also be because our borrowing rate on the international market is way too high as compared to this our benchmark friends?
You are right.
If we are borrowing at 80% as compared to 9% from Singapore, Malaysia, don't you think that's also one of the issues, sir?
You are right. And that's the more reason why we should have been more sensible in how we use those borrowed funds. Okay. Because we should know that we are acquiring them at a higher cost. Do you get a point? Yes. So when you take expensive debt, it should guide you in investing it prudently. We have the statistics. It's not only Ghana. Actually, it's not only Ghana. The average interest cost of African countries since 2010, borrowing from the international capital market, has been 11.6%. That's the average interest cost of African countries. It's not only Ghana. Okay?
Yeah.
The average interest cost for the US, borrowing from the state market, has been 3.1%. The average interest cost for Germany, borrowing from the same market, has been 1.5%. So you can see the marginality. Is that okay? Yeah. The question is, when you take those expensive debts, you don't use it to subsidize consumption.
Okay.
Then it means that your economy may not be able to pay. When you take those debts, you want to be able to use them to enhance the cash flow generation capacity of the economy. Of course, as a finance professor, I also understand that the interest rate at which you borrow has implication for productivity growth. Is that okay? And therefore, there's conventional wisdom in lowering the interest rate. But it has more to do with spending inefficiency in Ghana. Please, you check across this country, the cost of constructing roads, building a 6 classroom block. You check procurement infractions. Please check. It's not only just central government. Check how much Bank of Ghana is spending in putting up a headquarters. You check.
Now, Prof, on the issue of interest rates, now this question was put to the IMF that there's disparity at the current TB rates as compared to the bond rates.
Yes.
What is your take on this particular matter?
Yes. Should we say, is a negative outcome that we need to correct. Normally, when you do domestic debt restructuring, like the way we have done, you have one other primary objective, or one primary objective, which is to lower the yield curve. So the part of the goal was to introduce a new yield curve with the domestic debt restructuring. And you could see the government made the attempt. I think somewhere February or March, there was an attempt to drag down the treasury bill rate. And it didn't work. In our projections, we're hoping that the new yield curve will lie below 15%.
Okay.
Now, but at the time we did the domestic debt restructuring, there wasn't proper consultation. The necessary conditional framework to enable that to happen were not present. The Financial Stability Fund hadn't been set up and all of that. Inflation was still very high. Bank of Ghana's own policy rate, it was more than 29%. Do you get a point? Yes. So we set a higher inflationary environment, and the fact that the Financial Stability Fund hadn't been operationalized, it was then difficult to drag down the treasury bill rate. Then also, given that the government had been priced out from the international capital market, the only medium available to the government to interact with the financial market was through the money market. And given that the government has a a huge financing gap to close, essentially from the domestic market, government couldn't enforce the new yield curve.
Sure.
Okay, and therefore we have an invented yield curve, not a normal yield curve, which says that short-term instruments are even more expensive than long-term. And now, so to do this, we have to make sure that inflation comes down.
All
But
right.
this is what is likely to happen. This is what is likely to happen when we conclude. I'm saying when because it has to be done, and it looks to me that we'll certainly finish the debt restructuring, if not by the end of this year, latest by the close of the first quarter of next year. Now, let's look at it this way: if the government is able to complete the debt restructuring, okay, and
This space was downloaded via spacesdown.com. Visit to download your spaces today.
they are able to achieve the level of debt relief from the external debt restructuring as captured in the IMF program of approximately $11 billion, that will make a lot of money available to the government.
Okay.
And with that, they will not be borrowing that much from the treasury bill money market. Then that will give the government the cushion to be able to drag down the treasury bill rate in order to enforce the new low yield curve.
So
Until
in essence,
then,
Prof, what is happening is not abnormal, right?
no, it's just consistent with the imbalances in the economy.
All right. Great.
When you see situations like that, a single textbook cannot help you.
Yeah. I get you. Yes. Yes. Okay. Prof, so now on to the issues about the IMF giving an indication that we need to have an MOU signed with the creditor committee in order for us to assess the extra $600 million. Do we see this happening anytime soon?
We are getting indications that progress will be made from that end so that the whole program implementation will not stall.
Yeah.
As I said earlier, this current IMF supported program, the progress we make with the restructuring of our external debt is fundamental to translating the program objectives into actual. Okay, so and you can see that the IMF itself is upbeat about this. You can see the managing director saying that yes, Ghana will scale the wall and get the next tranche of the IMF supported program.
Yeah.
Right. So the fund itself is talking. The fund itself is doing all that they could. In fact, let me put it this way: if you interact with the international community and other countries, there's a certain feeling that Ghana is a preferred child of the IMF.
Yeah, that's true.
Yeah. And that the IMF has literally treated Ghana with its growth.
Yes.
Okay, so, but that is also consistent, right? Remember, in this current geopolitics, global geopolitics, and geoeconomic fragmentation, the IMF itself is concerned about consolidating its hold.
Okay. Ladies and gentlemen, if you are listening to us, coming to you from Graphic Business Studios, number 3 at Graphic Road.
Hello?
Prof, are you back? Yes, please.
Yes,
If
I'm
you
back.
can read
I
first
was
a few
saying
seconds
that,
back, yes.
yes, I
Your
was
line
saying
kicked
that
off.
Ghana is a preferred child of the IMF.
Yeah, no doubt.
And that is good for them. Why? In this current global geopolitics and geoeconomic fragmentation, Ghana's situation plays perfectly well into the marking scheme of the IMF.
Yeah.
As they strive to consolidate their hold on vulnerable countries in the new partition of Africa and other developing countries. Remember that the IMF is more pro-West. In the new global geopolitics of the BRICS and then the West and the rest of them, this is a child IMF won't let go. So that is largely consistent. I think that from analysts and from predictions, it looks almost certain that by the end of November, Ghana will get the next tranche of the IMF supported financing of $600 million. Yeah.
Okay. Prof, so hold on for now. Ladies and gentlemen, if you join us, we are having a Twitter discussion on the IMF review of the economy. We'll open up the space for people to ask questions very soon. Today, Prof has graciously agreed to give us 2 hours of his lecture time. So please, we will open the lines for you to ask all your necessary questions. And please, if you want to ask questions, kindly please press the raise your hand by using the icons below your Twitter handle. Also, let me announce that this discussion will be available tomorrow on our News Plus app tomorrow. Graphic Business, please, if you don't subscribe to Graphic Business, please subscribe to Graphic Business. We do have detailed analysis of the economy every week and every Tuesday. Graphic News Plus apps, both on the Google Play Store and App Store. You can download it for a small fee. Thank you very much, Prof. So back to our discussion. So what is
Yes.
the way forward?
I think for now, I'm looking at it from two ends or two directions. One was the domestic side.
Okay.
So if you look at from the domestic side, in terms of the debt overhang, government we can say has almost completed the domestic debt restructuring. Okay. In terms of the total eligible bonds of the domestic debt, end of 2022, we were looking at 259 billion cedis was what we were looking at. And then we excluded treasury bill, which was around 34 billion cedis by then, but now it's gone up a bit. And then the first round of the debt restructuring, we restructured, I think, 85% of 98 billion cedis. Then we had the Bank of Ghana's own net claims on government, 77.6 billion cedis. That has also been restructured. We have the cocoa bill, 8.8 or so billion cedis. Largely, that has also been restructured. We have the US dollar component of the domestic debt. That was around $808 million. That has also been restructured. Then I think we had pensions. We
Yeah.
had pensions, which was around 30.2 billion cedis or so. That has also been restructured. Overall, if you look at the participation rates, we are looking at something in excess of 90%. So we will say that is good news for government, but that is paid to creditors, pensioners, okay, pensions, banks, and the rest of them. What you see from there typifies the level of sacrifice that Ghanaians have to make in order to give this country the opportunity to have a future. So with that done, the way forward now has more to also do, as I said earlier, about the restructuring of the external debt. Hopefully, if we're able to make progress with the official creditor committee and then also the external commercial, then the outlook becomes a little clearer for us in terms of what we need to do. But we should just know that the best helping hand that Ghana can find is not with the IMF. The best helping hand that we can find is at the end of our own arm. We need a deeper and more sequenced and bundled reforms to complement what we have in the IMF program. Look, let me put it this way: the way forward, governance reform. Our problem is largely governance. Governance failures manifesting in procurement infractions, inefficiency in our public investment process, large government size. If we don't fix those ones, look, we can tax everybody, including those yet unborn. We cannot make sufficient progress.
Okay.
We cannot.
All right, Prof. Yes, Emmanuel, you have a question, and then followed by worldwide. I also see Lionel raise his hand earlier on. Please, after Emmanuel, worldwide, if you are there and listen, you want to ask your question, please. We can ask 3 sets of questions, and Prof will answer them, and then we'll move from there. So, Emmanuel, please ask your question.
Okay. Good morning, Prof.
Yeah,
This
good
morning
morning.
you've indicated that yes, we are beginning to see signs of recovery, and then the economy is showing signs of recovery, but then this recovery and then the growth in the economy is not broad based. um, we we November, it's likely we will receive the second tranche of 600 million from the IMF. From where you sit, which critical sectors do you think the government should spend the 600 million in to ensure that broad-based growth that you are talking about?
Okay, Emmanuel, thank you very much. Worldwide, Prof, before you speak, worldwide, if you are there, can you unmute your mic and ask the question? Abdul, are you there, Abdul? Okay, how about Lionel? Lionel, I've invited you to speak. Are you ready? All right, Prof, please go ahead. When they ask them when they come, yes.
Okay, thank you very much. I think that's an important question. And I am happy that you do agree that end of November we'll get the next $600 million. We needed it like yesterday. So thank you very much. So um, in terms of priority spending, I will rank agriculture, agribusiness, agro-processing number one.
Okay.
Why is that so? Food is a basic human right. That's how I see it. Any country that cannot put food on the table for its citizens at both quality level and at affordable rate or price has failed. Ghana's food inflation is one of the highest in the world.
Yeah.
So any government should prioritize food safety. We have to. It's not just the kind of interventions we have seen in this country in the area of agriculture sector, largely driven by political affiliations and the rest of them. No. If you look at how much we have spent in the last 12 years or so, different interventions in the area of agriculture, planting for food and job and the rest of them. Really, if we had focused and we were efficient in the delivery process of these interventions, with COVID and Russia, Ukraine, we wouldn't have been exposed the way we have. Okay, so critically, we need to look at agriculture, agribusiness, and agro-processing. It's very important. When you do that, from the social accounting metrics from Ghana Statistical Service, the employment multiplier and the income multiplier from agricultural productivity growth is one of the highest in the country. Again, the inequality narrowing effect or the inequality reducing effect of agricultural productivity growth is also very high for us as a country. So that is very important. Other studies have also been done in terms of job creation, that if you spend $1 million in the area of agribusiness, you are likely to create along that value chain in excess of 750,000 jobs. Okay. So if you want to create jobs, we want to narrow inequality, reduce poverty, then I think we should prioritize agriculture, agribusiness, and agro-processing. Is very, very important. In fact, as a starting point. Why is that so? That will offer a major cushion to Ghanaians, because the average Ghanaian spends between 42 and 44% of their disposable income or household expenditure is on food. Okay, so if food takes that percentage of household expenditure, then it means that when you see food inflation as high as we have seen in Ghana, then the impact on household budgeting is very high. So you want to look at that quickly and address that. The more you address that, the more you free up fiscal space for households for them to also save and then accumulate capital, build up investment, build up capital, so that they'll be able to also take advantage of the limited economic opportunities we are able to create. So that is very, very important. Now, if you look at the inflation dynamics, in fact, even though we are saying that inflation has come down to 40.1%. Food inflation is still more than 50%. Food inflation is still more than 50%. So we have to tackle that aggressively. Okay, we have to tackle that aggressively. By so doing, you are creating employment. You are also freeing up fiscal space at the household level. They'll be able to save, accumulate capital, be able to invest and take advantage of the economic opportunity. So that's one area we need to look at. Then, of course, we can also look at tourism and then other areas. But I think that Ghana should prioritize agriculture, agribusiness, agro-processing. We have to, in the next 3, 4, 5 years, we have to make sure that there is food cheaply and of quality available. We have to do that. No, when you go to other countries, you will see that food inflation is very high in Ghana. It's very, very high. In an economy, in a country where income levels are that low, we should not take ourselves through something like this.
Okay, Prof. My
Okay,
follow-up question. Okay, Emmanuel, go ahead. Emmanuel, go ahead.
yeah, I just have a follow-up question. Prof, talking about making investments in the agriculture sector, the government recently launched a phase 2 of the planting for food and jobs. Considering how the first phase of the planting for food and jobs program went, do you think the first phase of the program was able to achieve its goals for us to even launch a second phase of it at this point?
One of the things maybe government could have done would have been to conduct an impact evaluation of the first phase, an independent one. Okay, probably ask ISE to do that at the University of Ghana here, or an independent body to look at it independently, assess the impact and the rest of them. I'm sure then we'll be able to learn useful lessons, which will guide the second phase and the rest of them. Of course, we can give government the benefit of the doubt. Probably they've done their own impact evaluation and all of that. But my considered view is that sometimes you get to see the efficacy of your policy, right? You get to see whether your policy is working or has worked in crisis moments. Okay, so when crisis hits, that is why people build reserves. When you build reserves, it's not for normal times. Countries plan, others build oil reserves, build whatever. Is you do so in anticipation of crisis, because they do happen and they will happen. So given that COVID came, Russia, Ukraine, and we are exposed like this, I have asked the question before, then where is the food and where are the jobs from the planting for food and jobs? It's not only this government and this particular intervention. If you check in this country, we've had many of these socially desirable flagship programs and the rest of them, but their implementation are usually saddled with inefficiency and party activities, and therefore we are unable to get the maximum return from that investment. You can check those days, SADA, are confirmed trees, whatever. Some are confirmed that flew out of this country, but not to the south. You can check. Okay, and meanwhile, all of these things also, we made substantial budgetary allocation to some of these flagship programs. Okay, and yet we don't implement them efficiently. You can look at so many of them, Maslow, the rest of them, the rate of the loan repayment, and the rest of them. Even you can look at 1D, 1F, and then let's check the data, whether really it has led to reducing our imports significantly after so many years of implementation and the rest of them. So and that is why I said earlier that we have to find a way of ensuring greater efficiency in our investment process, in our programs, in our interventions, and the rest of them. Other than that, I'm not too sure as a country, we're actually making good use of our limited resources. Of course, resources are limited everywhere. It's not only in Ghana, but the extent to which you can maximize the alternative uses of scarce resources, That's what makes the difference. And I think Ghana, that's where we haven't been doing well at all.
Okay, thank you, Prof. My follow-up question will be, you did mention earlier that we are overtaxed. First, what alternatives do government have apart from taxation to raise revenue? Secondly,
Okay.
what are the very tangible things that you think government should do to free up the space for the private sector, as you rightly said, so that they create the um, job-rich employment for the youth of this country? What are the very tangible things you recommend?
Okay, thank you very much. So sometimes you'll find Ghanaians saying that we are overburdened with taxes. And then on the other hand, government is also saying we are not paying taxes at all. We are not paying enough. Okay, so let's put them within context. When it comes to direct income tax, hello?
Yeah, Prof, you're on. Go ahead.
Yes. When it comes to direct income tax, it's just a small percentage of Ghanaians who are paying their taxes, direct income tax. I think out of a tax-paying population of about 13 million or so, if you look at it from the labor force reports, or 13.4 million Ghanaians who are in a tax-paying bracket, I think just a little around 2.5 million people are paying direct income taxes. So that tells you that quite a lot of Ghanaians who are in the tax-paying population are not paying their direct taxes. That is where the issue is. But because we are not doing quite well with enforcing or generating sufficient tax revenue from this particular tax handle, we then tend to load ourselves with multiple indirect tax handles, consumption based. Okay. Now, this is where the issue is. Instead of deepening the taxes or burdening the faithful few, who are the faithful few? Probably they are within the bracket of the 2.5 million Ghanaians who are honoring their direct taxes, direct income taxes, probably largely in the formal wage economy. The other percentage, more than 70%, are not. A good number of that, a good percentage of that are also in the informal sector. The question is, if you have the structure of the economy like this, how do you design a tax structure that is progressive? That is where the issue is. To do so is hard work. We don't want to do that hard work. How do we go after this other 70% of the people within the tax-paying population? What are the targets and the strategy? That is the issue. So because we are not going after those people to rope them in, what we have been doing over the years is just to burden the faithful few. And if you look at it carefully, then you will see that the middle class then is at risk. Again, if you look at the existing tax handles, even before the recent upward or rate adjustment in some of them, you can see that when it comes to corporate income tax, we are not maximizing that particular tax handle. We are not. In other words, the level of inefficiency in that particular tax handle is very high. That's corporate income tax. Again, when it comes to even VAT, the level of inefficiency in our VAT collection and administration is very high. When it comes to the other tax handles, you will see it also. So what that means is that you could actually generate a little bit more tax revenue from these existing tax handles without even adjusting the rates. Then in that case, the effort should be focused on administrative reform and greater compliance from Ghana Revenue Authority, especially if the political economy will not interfere with the work of the Ghana Revenue Authority and asking them to slow down on the implementation of EVAT or other reform that they want to do to rope in people who are not paying, or institutions that are not paying the required taxes. That is the way. That's how we should approach it. Now, when it comes to the fiscal regime, the extractive sector. When it comes to the extractive sector, is one area that we should take another look. The fiscal regime within the extractive sector, we should look at that again, because we are not getting we are not maximizing our tax revenue from the extractive sector, even compared to Nigeria, compared to other countries as well. And it's simply because of the fiscal regime we have negotiated in the extractive sector across mining, oil and gas, and the rest of them. So if you have the gaps this way, then you don't close the gap by introducing new taxes. When you do the analysis and you do your fiscal impact, fiscal capacity analysis, either using the stochastic tax frontier analysis, and you arrive at the gap, the next important thing you need to do is the gap driven by policy or administrative and compliance. And I'm thinking if the gap is driven largely by policy, then you can close the gap by introducing fresh tax handles. But if the gap is driven more by low compliance and lack of administrative reforms, then it means that you don't need to introduce new taxes, but more of administrative reforms and greater compliance and enforcement. That way, you'll be broadening the tax net rather than deepening it. And then the other critical thing that we have done recently, which I think is more problematic, is the backdoor approach. Is the backdoor approach that government has adopted to collect more tax revenue from Ghanaians, whilst on the other hand, creating the impression that our taxes are low. I'll give you a couple of examples. Take VAT. Somewhere 2018 or so, the government decided to decouple the VAT rate from the standard VAT rate from GETFund, National Health Levy, and the rest of them. So what that means is that by decoupling, our VAT rate now is 15%. And if you look at it purely from that perspective, you may think that Ghana's VAT rate is one of the lowest, probably a little higher than that of Nigeria. Nigeria increased their VAT rate to 7.5% recently. It was 5%. Okay, so our VAT rate currently is 15%. Somebody can say that the average for Africa is maybe 16% or 16.4%, and ours is 15%, and that is low enough. But that is not true. Because of the decoupling, if you add the other handle levies, they call them levies now, of VAT, of GETFund, National Health Levy, and then the others, it comes to about 16%. So actually for the consumer, the incidence of the VAT is actually not the 15% government is quoting. For the consumer, the incidence of the VAT effectively is around 21.9%. And this is too high. This is too high. Okay. Now, the other bit also is that this 6% levies we are talking about here does not even allow suppliers to recover, which if they had treated all of them as VAT, it would have given them an opportunity to recover the input side. So that 6% adds directly to the high productive cost base of doing business in Ghana. And that is something that we need to look at. Studies have shown that if your VAT rate is more than 18%, it becomes counterproductive. So that is why our recommendation to government, and I'm hoping that in the 2024 budget, government will take another look at this decoupling. Let's match the standard VAT rate of 15% and then the straight levies of 6%. Let's match them and peg them at below 18%. Free up space. So the difference between, let's say, 18% and 21% is space you are creating for the private sector, is space you are creating for households to be able to save. That is a way to go about it. That is not the only thing. If you pick this, then you have COVID-19 health levy, you also have e-levy and all of that. And if you look at the e-levy, and I think quite recently we had the Minister of Finance saying they will look at redesigning the whole e-levy. It was poorly designed, poorly conceptualized. Okay, and I think that the levy should be deleted. Let's give space to the digital economy to grow. And at some point, we may introduce taxes gradually. We have introduced e-levy prematurely, and it was poorly designed. Okay, and that is not helpful for growing that critical sector of the economy. And the reason we're a bit concerned about that is that if you look at all over the world, the digital economy is expected to grow faster than the traditional economy. And the digital economy holds a higher job creation capacity for our economy than maybe the traditional economy. So we need to look at that particular tax handle. That is just for the consumption side. Then come to corporate income tax. We peg our standard corporate tax rate at 25%. Then we introduce backdoors to collect more taxes from them. One, now we have growth and sustainability levy. We have in the banking sector, in addition to that, we have the banking sector recovery levy, and then a host of them. So at the end of the day, if you put everything together, those firms that are faithful in complying with their taxes are being burdened the more. Meanwhile, that corporate income tax, the inefficiency there is high because some firms are not making proper disclosure and they are not roped in appropriately. So if you can look at it from that end, the more you structure your tax handles and make them more progressive, the more you free up space for private sector to grow, the more you create space at the household level for them to also save and invest. That will be my response. Then when you have done all of that's the revenue side, then you want to be able to appropriately complement gains from that end by cutting wasteful expenditure. Do that as a way of courting industry, as a way of courting private sector. Let's do that. Let's merge some ministries. It will result in some immediate job losses, some pain, but those are the painful adjustments we need to go through in order to have a sustainable future. Merge some ministries, reduce the size of government, restructure state-owned enterprises. Certainly at the state-owned enterprise level, some people will certainly have to be laid off because they are on payroll. What is the value addition? What is the productivity contribution? It's not sustainable. So we need to look at all of this so that gradually, because creating space cannot be done in a single year. And I know some people will say that, oh, even if you collapse one ministry, how much are you going to save? It's not significant. Yes, it doesn't have to be significant. You are looking at it over a long term. If the state is comfortable to say that if I send 100 Ghana cedi to my mother, and the state is comfortable to take 1% of what that 100 Ghana cedis, and that is big enough for them to take, why won't a savings of closing one ministry not be significant enough? Okay, so we are looking at it broadly from different angles. Here a little, there a little, there a little. We aggregate it. We are making progress gradually, because the kind of economic transformation we are asking for or looking forward to is not something we can get in 4 years. In fact, certainly not something we can get in 10 years because it takes time. You need to build gradually, and consistency is very important. It's not something you can just achieve overnight. But unfortunately, we have not started.
Thank you, Prof. Prof, I'm sure that also people will not be happy with you with the suggestion that government must rope in the 70%. Already, they are crying that that people are chasing them at Abosokan.
When it comes to paying taxes, I agree with you. Nobody is comfortable.
Absolutely.
Nobody. In fact, right from the Bible days, during the days of Jesus Christ, the Roman occupation, the Old Testament, it has never been user-friendly paying taxes. Even paying tithes has not been that user-friendly anywhere. Okay. In the Old Testament, they impose a penalty for not complying with your vow on time. If you make a vow and you don't pay it on time and you redeem it later, you pay 20% penalty.
Yes. Sure. So on this note, I would like to open the floor for discussions. Anybody who has questions to answer, please kindly indicate by raising your hands. Go through the handles down, and then I'll give you the opportunity to ask a question. Once again, we are coming from Graphic Business, and you can subscribe to Graphic Business on the news app. when you go online to Google Play Store or the Apple Store. Graphic Business comes out every Tuesday. Daily paper, please subscribe. We have in-depth analysis of the newspaper on the economy every week and on our online spaces as well. Kindly please do that. Any questions on the floor? Anybody who wants to ask questions? I can see the chairman of CRAFE join us, Kennedy Okusun. Welcome, sir. I can see Ernest, Emmanuel, Wilson, Lionel. Earlier, you wanted to ask a question. Hannah, welcome. Hamda, Kwesi, Kofi. I can see all of you here. Quite a good number of people here. Nia J, please, are there any questions for Prof before he goes? What he has told us 1.5 hours ago is a master class. This is what you will not get in a master's and MBA class or an economic master's class and finance, please. So this comes to you free. So please ask all your questions now. Yes, Prof, before anybody raise a hand, let me ask.
Yes.
You did indicate the last time that this, what we are seeing, the current agreement makes room for an extension. And just a few minutes ago, you did mention the fact that we may not be able to achieve the growth in the next few years. It could be 10 years. Now, would you buy into the discussion from people that we should have a long-term plan for economic development?
Yes, I agree. We should. In fact, we have gotten to the point where we should not leave the destiny of this country to merely political parties' manifestos.
Okay.
It has not delivered the democratic dividend the ordinary Ghanaian can associate with. Some of those ideas they hurriedly put together in their political manifestos cannot stand the test of time.
All right.
And this is the time to appropriately resource and empower the National Development Planning Commission, right?
Yes.
To play a leading role in our development journey is very, very important because they are able to look at things objectively, test them. Some of them on cost-benefit analysis and the rest of them, so that we are clear that in the next 15 years, the next 20 years, the next 30 years, this is where the country is going. This is the level of a road stock that have to be added on annual basis. This is the level of infrastructure deficit that must be closed annually. This is the level of growth that will be sufficient to benefit every Ghanaian. So that the difference between political party A and political party B is a strategy to achieve that. They cannot determine both the outcome and the strategy. That's too poor. And that is what we have witnessed over the years since 1992. Of course, we know that perhaps there is no constitutional or legal basis for political manifestos. Correct me, I may be wrong, I'm not a lawyer, I haven't looked at that. But you realize that when political parties come to power, all that they are concerned about is how to channel their political manifesto promises through the budget. Because the budget is a national document. The budget has a legal source. Okay, so you see party A comes and the whole thing changes altogether. Because now it's about their manifesto. And
sorry, Prof. If you are listening to us, I think Prof line tripped. He will be back shortly.
Hello, sorry. Can you hear me now?
Yes, now it's better, please.
Yes, I was making the point that once the party wins an election, their preoccupation is how to pass through their political manifesto promises through the budget. Because the budget that has a legal source. Until the political promises are captured in the budget, they cannot be translated into actual, unless you want to do out of budget spending. But the idea is that some of these ideas in the political manifestos have not been tested. Some of them, they don't even cost them at all. At the time they are making the promises, they had no idea what it will take to translate those promises into actual. And by so doing, they just burden the citizens. And sometimes too, you see the incoherence, the inconsistency of one policy within a certain national framework. And yet, once the promise has been made, that is it. Okay, so, and I think that is not sustainable.
Yeah.
That is so. I buy into the idea that we should have a nationally determined development plan with clear goals and targets. It
Sure.
doesn't mean that it will take just one political party to achieve it. The difference between party A and party B will be the strategy
Yeah.
and the efficiency you bring to bear to reach that target. We cannot leave the destiny of this country, both in terms of process and outcome, entirely to the whims and caprices of political parties. No, that is not sustainable.
Prof, a key feature of this review talks about the or enforces the idea that the social interventions programs cannot be touched. What is your view on that?
Well, the IMF, despite all that they do,
Mm-hmm.
they also play to the political correctness game.
Mm-hmm.
They look at what is it that they can touch without offending the regime.
Mm-hmm.
Remember, the IMF has a relationship with the authorities. Actually, not you and I.
Yeah.
Not you and I.
Mm-hmm.
So, if the authorities are very firm that this is a no-go area, the IMF will be mindful to comply with that.
Okay.
We've seen that with the IMF, and the IMF knows.
And that
So,
may not necessarily be helpful.
it may not be helpful.
Okay.
It
But
may
in
not
your
be.
view, do you think that any of the social interventions have to be reviewed?
Oh yes. Let's
Which
take
ones
free
are
senior
these?
high school. Let's take
Which
free senior
ones?
high school. Let's take free senior high school.
Okay.
You know what? I will not run away from this. I supported free senior high school.
Okay.
I supported it.
Yeah.
But not in this form.
Okay.
Not in this form. We can still have a version of free senior high school that says that if your child is going to be in the boarding, you should be prepared to feed your child.
Yeah.
It is still free senior high school. If
Mm-hmm.
your child were to be staying with you at home, wouldn't you feed your child? You feed your child.
Mm-hmm. Mm-hmm.
You feed your child. So let's make free senior high school free. But if you choose the medium that you want to put your child in boarding or in day, that should have cost implication for you who is making that choice.
Mm-hmm.
By so doing, you realize that there are so many people who are in the boarding system today and it's overcrowded, and it
Mm-hmm.
wouldn't have happened. Do
Mm-hmm.
you get the point? It wouldn't have
Yeah.
happened.
Yeah.
If people knew that if your child is in boarding at Achimota, you have to pay. If the person lives at Legon, you will weigh the options.
Mm-hmm.
Then in that case, people will prioritize putting their children in communities where they are closer to.
Yeah.
In that case, people will be more concerned about how the schools in their communities are doing because they know
Mm-hmm.
that is where their children are attending. So
Mm-hmm.
we can still have free senior high school, but then we look at how do we operationalize it. Then again, you also look at some of the social programs within the whole resource envelope.
Yeah.
We look at it within resource envelope, and that sometimes that is where political parties with their manifestos they get it wrong.
Mm-hmm.
Now, you pick education sector today. If you look at the budgetary allocation to the education sector, you will see inequality within the education sector, the value chain.
Mm-hmm.
Pre-secondary school, secondary school, and then tertiary. You can see that because the government is focusing so much on free senior high school, a lot of resources is going to free senior high school to the detriment of pre-senior high school.
Yeah.
You get a point? So
Mm-hmm.
that is not helpful. So the inequality within the budgetary allocation within the educational sector is not helpful.
Mm-hmm. Yes.
So we need to look at it. Then the question can also be that, okay, we want to do this, but we are not in a position to roll it out 100%. For
Mm-hmm.
now, in terms of paying for registration, textbooks, and the rest of them, they are all going to be free. But if you choose to put your child in boarding, please be prepared to pay. Let me tell you something.
Mm-hmm.
Even under free senior high school, out of pocket spending by
Mm-hmm.
parents for the upkeep of their children in the free senior high school boarding system is even higher than when boarding was being paid for. You check the data. You
Yeah.
talk to them. Parents who virtually every 3 days have to WhatsApp jollof rice to their children in the secondary schools. You meet them at the bus stations, package food, send it,
Yeah.
WhatsApping it to their children almost every 3 days, almost every week.
Yeah.
And because of free senior school and the track system, people are paying so much to have supplementary intervention for their children today than before.
Yeah.
Okay, so we celebrate the president for introducing free senior high school, but let's make it work.
Yeah.
Possibly Ghanaians are willing to support the president. You know, politicians, sometimes when people are willing to support them because they are so eager about taking all the credit, they don't want to even accept help in a way that will inure to sharing the glory.
Sure.
And that is not helpful. So I think
Thank
the
you.
president should take another look at the free senior high school. As it
All
stands
right.
now, we can assure you,
Oh.
I'm in the educational sector. The free senior high school, quantity wise, yes. Quality wise, there's a lot of improvement that needs to be made. And you check today. Do you know why? One way of testifying to that, check the number of politicians who are now sending their children to private schools.
You're right.
Check
Verbal
the pressure now
transformers.
in the private schools.
Sorry.
By doing this, can you hear me?
Yes, we can hear you now.
I'm saying that if you want to know, you check the level of pressure now on the private senior high schools. Every politician now wants to take their child to the private senior high schools. Christian High, Akosobo International. You check. Was it like that before free senior high school?
Nope.
Okay. We are essentially destroying the long cherished traditional senior high schools that even when we were in primary school, it was a source of motivation to study.
Yeah.
We are destroying it. People in primary school were already targeting to go to Achimota, to go to Infantipin. And that itself was a source of motivation.
And Accra
Now
Academy.
people don't want to go to Achimota. People don't want to go to Infantipin. People are now sending their children to private schools and they are paying 40,000 a term, 48,000 a term. All of this will create greater inequality. And it may defeat the ultimate purpose of the free senior high school of inclusivity. I'm sure you go and check. Today, if you want your child to get admission to Akosobo International School, it will be better off probably going to see a top politician or something.
Prof, you didn't mention my school, Accra Academy, and I'm offended.
Oh, I'm very sorry. It will come up in our next series. Okay. So I think that something is good. We celebrate the president for introducing free senior high school. But beyond the introduction, the next important question is, how do we make it work?
Yeah.
And sometimes it is helpful to begin gradual, okay, so that we see how it, and we evaluate, and then we get to a point where we say, okay, now within our revenue envelope, resource envelope, we are able to do free senior high school where we even feed them in the boarding school.
Yeah.
Yes, we can. Let's be gradual. Then it means that, look, being a leader, it also means being realistic.
Yeah.
Okay, and I think that is the option we have to explore. Apart from that, when it comes to planting for food and joy and the other interventions, I think that government should be bold enough to partner with the investors, KNUST, UCC, University of Ghana, so that independently and objectively we can evaluate some of those flagship programs, so that going forward we learn lessons from it.
Yeah. So I can see verbal transformers. Do you have a question to ask, please? Verbal transformers.
Yeah, so Prof,
Please.
Thanks so much for the deep thoughts shared, and it's been very enlightening. And we've identified so many problems, and it looks like even amongst the citizenry, we have the solutions and all that. The actual thing on grounds now is the fact that our leaders don't pay attention, critical attention to these things. So, Prof, I think going forward, this is what I would specifically like to ask. What are the key things we would have to address to hold these leaders accountable? Because the main thing here is accountability, which is actually destroying the whole state of the economy. So if whether we keep getting support from IMF and all that, whether they have their own motives behind what they are doing and their exchanges and all and the support. What are we supposed to do to ensure, like someone like you who has so much identify these problems and you have key solutions that come to that? I was going to ask certain questions, but you answered in your last submission. So, what is the exact way forward to hold these leaders accountable and make sure that every initiative that is rolled out, it becomes effectively rolled out?
Okay. Thank you, Verbal Transformers. You made your point. Prof, before you answer, a gentleman, Black. I can see you, Black. I can see you want to talk. So, can you please ask your question, Black?
Okay, I want to ask you, I didn't hear you talking about the health sector. And what
Please speak up a little bit. Speak up. I
I,
can't hear you.
I was asking, please can you hear me now?
It's better. Yes.
He want to ask Prof about the health sector too. He didn't talk about the health sector, the national health insurance levy that is put cap, they cap it, and they are taking the money which comes with the levy, the extra things which are not dealt within. I want to ask about the new one, the the country under the IMF and affecting the health sector.
Okay. Okay, Black. Your question was the health sector, right? And you want Prof's answer. And then Prof, Verbal says that holding leaders accountable. These two questions, please.
Okay, thank you. I got the first one correctly, but the second one I didn't get. I heard about the
Yeah.
health sector, but I couldn't get the specific question
Okay.
about it. Was it about the national health insurance levy or scheme?
Yeah, the levy is more.
I
Black, I
still
think your this one is very bad.
yeah,
Your feedback. You can type it actually at the back end. We can pick it from there, okay? Just go to the
yes,
back end and type what your question is, and then we'll pick it from there.
yeah,
Let's
that
start
would be
from
very helpful. Yeah.
yes.
Okay,
So
so
Prof, go ahead with
on
your
the first
question.
one, yes, I agree. If you look at the way democracy is designed, by definition, is the people. By operationalization, it's not about the people in Ghana. How do we make it, by definition, people centered, by operationalization, also people centered? To do so, will require that we strengthen both accountability, horizontal accountability institutions, and then diagonal accountability institutions. Let's talk about the horizontal ones. The horizontal ones are the ones captured in the Constitution, in our various laws. The judiciary, parliament. This is, and then we can even talk about maybe the third arm, maybe media, whatever. So that across the horizontal accountability institutions, they perform their role appropriately as checks and balances on each other. We have not done that quite well as a country. In fact, Parliament itself, and I'm sure one day with the right experts, we need to really evaluate whether Parliament has actually lived up to its responsibility since 1993. We should be able to look at it. And then we can also look at the judiciary and the rest of them. And the reason I'm saying this is that under democracy, institutions are supposed to play key roles as checks and
Okay, so Prof, trip off again. Okay, they're back.
hello.
Yes, Prof, you
Hello.
trip.
Yeah,
You trip. So go ahead.
in advanced democracies, institutions
Okay, Prof.
in the
Okay.
advanced countries,
Yes.
institutions work, and institutions work regardless of who is in power.
Mm-hmm.
In Ghana, institutions change sometimes quicker than the direction of the wind to align with the party in power.
Mm-hmm.
This is not sustainable.
Okay.
This is not sustainable. We cannot build a credible democracy if institutions adopt such character of changing depending on the environment at the end of the day. No. But to also build credible institutions, you need strong men to lead those institutions.
Mm-hmm.
And that is why recently recently what happened at Bank of Ghana with the losses they accommodated. Some of us felt strongly that the governor should have resigned long ago. It's a big indictment on the institution called Bank of Ghana, because Bank of Ghana failed to act as a appropriate check on the fiscal side, and they sold their birthright and undermined operational independence of the central bank. The result is the losses on their books. We cannot build a country if all of us kowtow more or less to just leaders. No. The central bank governor cannot be at the beck and call of the Minister of Finance or the government. No. That is why the president cannot just fire the governor anyhow. That is why the governor cannot be fired anyhow. No. There are certain institutions that, under normal circumstances in this country, no president would even attempt to mess up with. For us to achieve that, citizens must equally understand that and help in supporting those institutions so that they can be independent.
Yeah.
So that they can be independent and function for the common good. As it stands now, the horizontal accountability institutions that should act as checks and balances, as gatekeepers, watching over the ordinary Ghanaian, they are in bed with top politicians. That's what is happening.
Okay.
That's what is happening. And therefore, the democratic dividend does not trickle down to the ordinary Ghanaian. It's as though every Ghanaian must be physically present at the table where the national cake is being shared. Once you are not there, there is no way some will trickle down to you. This is not sustainable.
Thank you, Prof.
If you see things like this, then we have to find a way of saving our democracy from itself, not the alternative. How do we make our democracy work for ourselves? So beyond the horizontal accountability measures, then we should also look at diagonal accountability measures where CSOs are CSOs not because of what they can get from the same politicians and the rest of them, but they are CSOs because they stand for principles which will stand the test of time across different political regimes. And then also a viable media that is independent is critical. Our media is not independent.
Yeah.
Our media probably can be bought at any price. And because of that, you see that the two main political parties are increasingly making inroads to have greater control over the media space so that they determine what people hear.
Yes.
Because we are what we eat and we are what we hear. Okay, so politicians they understand that. So they are setting up their own radio stations. The ones that are seemingly private, they are looking at ways of having control, even influencing individuals within those media houses to change content and who to invite and who not to invite. They are all happening in this country.
Yeah. Thank you,
We
Prof.
cannot continue like that. No.
Thank you so much, Prof. Hannah Nana Ishon says, so on point. This blanket-free SHS is not helping at all. The quality is very, very bad. On this note, once again, ladies and gentlemen, you can subscribe to the Graphic Business on our News Plus app on Google Play Store or the App Store. Graphic Business comes to you every Tuesday, and we do in-depth analysis of the economy together with people like Professor Bokpin and very, very senior economists and finance specialists. We are the leader in terms of business news in this country. On this note, let me once again thank you, Prof. If you just join in, you've been listening to us discussing the IMF review of the Ghanaian economy. Ladies and gentlemen, we want to first again thank Professor Godfrey Alokwe for giving us 2 hours of his time. This lecture obviously cannot be bought, even at the MBA class. So we are all fortunate to have heard this, and we thank him once again for every time being available anytime Graphic Business called him. The point here is this: Graphic Business is the most credible brand in this country, and we are, like Professor said, I'll quote him, we are the pulse of the nation. So we will bring to you, our readers and our audiences all over the world, new platforms and new avenues where we can reach out to a segment of the people who necessarily may not buy the newspaper. That is why we do these things, to reach out to people like you who have joined us this morning. We are grateful to you all for joining us, and we thank you. We hope to see you on Thursday. Thursday, we'll have another edition on Mindset Change with Akosia Bame, and we hope to see all of you here. Prof, thanks a lot. I will see you on the other side when we finish with this.
Thank you very
Thank
much.
you all for coming.
God bless you.
God bless you. Thank you all for coming, and God bless us all.